Hello and welcome to Livewire's Buy, Hold, Sell. I'm Ali Selby and I hope you have your notepads ready because in this episode today we'll be taking a look into our crystal balls to see what stocks could outperform in 2022. And to do that I'm joined by Arden Jennings from Ausbil and Tobias Yao from Wilson Asset Management. First up we have Lovisa, which recently announced its CEO would be stepping down after 12 years with the firm. His replacement formerly worked with one of the biggest retailers in the world. It's called Inditex Group. It's the parent company for Zara. Tobias, I might start on you. New global management, is it a buy, hold or sell?
Yeah, Lovisa is a buy for us. We've always really liked the store economics of the business and the vertical integration makes it one of the most nimble brick and mortar retailers. It is exposed to the reopening theme with more people going out and attending events and parties. We like the new CEO. If you look at his long-term incentive structure, some of the hurdles that they have for him is going to show very strong growth over the coming years.
Arden, over to you. Lovisa's share price has risen 86% over the past 12 months. Is it a buy, hold or sell?
Yeah, it's a buy for us too, Ali. It's a high conviction position in both the Ausbil Australian Small Cap Fund and Micro Cap Fund. Lovisa has around over 550 stores operating in 21 markets globally. But the new CEO, Victor, comes with a formidable track record. He was the global CEO of Guess, but also Inditex, as you pointed out, the head of the Asia Pacific division that oversaw the rollout of over 800 stores in India and China. And people will be familiar with Zara, obviously. And Lovisa is really the fast fashion for jewellery and expanding globally. So where their current store footprint is at the moment and where some of those global businesses have gone to thousands of stores, we think the market's probably pricing in between 1,000 and 1,500 stores, but we think personally that they can go well beyond that with their global rollout strategy, so it's a buy.
Next up we have TPG Singapore business to us. Arden, staying on you, is it a buy, hold or sell?
Yeah, not one that we own, but I think it's a buy actually after doing some work on it, but we need to still do some more work. But I think I might have talked myself into buying it. David Teo, it's the spin-off from TPG, where he is involved with the company. They're the fourth largest telco in Singapore with the opportunity to expand into Malaysia. With the reopening of economies, that could really benefit being a low-cost telco in Singapore.
Tobias, over to you. Its share price absolutely exploded after it reported in September. I think it rose around 60%. Over the past 12 months though, it's risen 136%, also amazing. Is it a buy, hold or sell?
It's a buy for us. David Teo is one of the most astute and successful businessmen around, having founded TPG Telecom. The reason we like TPG Singapore is the fact that we think the value offering is very, very attractive, particularly for the large migrant worker population in Singapore. We think that David Teo and the team can continue to grow TPG Singapore and continue to gain market share over there and potentially expand into other parts of Southeast Asia.
Next up we have reader favourite Electric Optic Systems. It's about to spin off its business called SpaceLink. Tobias, is it a buy, hold or sell?
Yeah, unfortunately it's a sell for us. We've always found it difficult to understand the opaque nature of some of the contracts that EOS has. And the track record of the management team has been pretty average, particularly with the cash collection issues. You know, the SpaceLink, the merger looks very interesting, so we're taking a wait and see approach, but until then, it's a sell for us.
Same question to you, Arden. It hasn't done that well over the past 12 months. Its share price has fallen around 58%. Is it EOS a buy, hold or sell?
Yeah, for us it's a sell. We think there are better opportunities out there for our funds. The company is accident prone, as Tobias has pointed out, particularly over the last 12 months, and that's obviously been reflected in the share price. We're not particularly attracted to the business model. They have lumpy contracts with large customers. They've had cash flow issues previously as well. And essentially it's a defence contractor. So we're not particularly attracted to the business model. We just think there's better opportunities elsewhere.
Arden, we asked you to bring along the number one stock that you're backing for 2022. What have you brought for us today?
Yeah, one that we like is Jumbo. It's founder-led. Mike Veverka is the CEO. They have jackpot lotteries within their business here in Australia domestically. They've re-signed with Tabcorp till 2030. The Oz Lottery change is expected to happen next year, which should increase the chance of jackpots, which we know that Jumbo is leveraged to. They're expanding offshore in a really measured and prudent way, buying businesses in the UK and Canada through Gatherwell and Stride. And we think that if they can land in the next 12 to 24 months, perhaps, a US state lottery, it could be game on for the stock.
Okay, Tobias, the same question to you. What stock are you backing for 2022 and why?
Yeah, so my pick today is Estia Health, which is an aged care operator. I think the aged care sector has had a very tough period over the last 5 years, first with the Royal Commission and then with COVID. Now, we think the regulatory uncertainty is coming to an end, and we think potentially the funding outcome from the government is going to be positive if you look at what they said in the recent federal budget, particularly for efficient operators like Estia. There's also been a lot of M&A activity in the space. Japara, which was the other listed peer, got taken over recently, and Regis had another bid not so long ago. So Estia Health is my pick.
Well, I hope you enjoyed that episode as much as I did. If you did, why not give it a like? And remember to subscribe to our YouTube channel. We're adding new content every week.